Now, this is a great example. We have December, and every year the question comes up from traders, do you stop trading in December? And I always ask the question, why would I stop trading in December? And they go, well, there's no volume, there's, whatever. And I say, well, I'm only looking for setups. So I don't do anything different. I don't change anything any different. And every year, inevitably, there's some great trade opportunities in December as there are in every other month of the year. And thinking typically doesn't get you anywhere. I'm looking just for the signal days, and sticking to the basic process is Wednesday closing in breakout on either side. And we have a signal that comes up, but going back and reviewing the higher time frame, we have a month in November that closed in breakout long before engulfing, and recognizing the higher time frame signals, the first red day in a month that continued to break down throughout December, and then giving us a signal day after Christmas on a shortened week, a 4-day week, Tuesday, Wednesday, Thursday, Friday, but a market that closed in breakout into a market that was breaking down. So another indication, just building your muscle memory, of an explosive move closing at the high close of the week in a month that was breaking down into the previous monthly lows. And going to our 4-hour chart again, we can see the explosive 1, 2, 3 on our 4-hour time frame closing in breakout, but not having broken any previous weekly levels. We've broken out obviously of the high of day level in the new week. We've made lower lows into the new week before explosively pumping up and coiling sideways. In our timing window, heading into our US window, we pin through previous daily levels from the week that was breaking down, closing in breakout. When we go to our 1-hour time frame, we see the sideways price action and pins on both sides. Heading into our timing window, no major red news on the calendar, and remembering our max stop loss can always be based off of those higher time frames. Closing price, the area where we're looking for this coil to build, if indeed that setup presents into our timing window, but our max stop loss heading into our US session can now be placed at the previous 1-hour candle, which takes us to the high of day level from the previous week, which basically places our stop loss, our worst case stop loss on our 1-hour chart at the previous high of day level. When we go to our blank chart, building your muscle memory visually, the explosive pump and the close and breakout at the highest closing price of the week, this sideways coil breaking out again, and then coiling inside of our peak formations into our timing window. Breakout, consolidation, and coil into our US window, and understanding our 4-hour rotation. So we have our new 5 a.m. 4-hour candle already printing and coiling. There's no major red news on the calendar. There is no reason why we cannot position ourselves in this market into our 7 a.m. hour. Go to our EMAs, we can see this market coiling sideways. And this is an example of where this market from 7 a.m. allowed us to position ourselves at closing price inside of our coil and inside of our peak formations made in the London session. The coil sideways at closing price, breaking through that low of session made in the London window, positioning ourselves to break even, and either taking profits as it trades into that US session level where the market pumped up, so we can put a preset profit target, or leave a trailer, so taking profits on either one or all positions, or leaving a trailer till close. We're at the end of the year, heading into the weekend of the following Friday into the New Year's weekend, so an opportunity to take the money and run. But a beautiful explosive close and breakout, highest closing price of the week, the coil sideways, EMAs rolling over, representing all time frames, now reversing our worst case max stop loss, going to break even, and either taking profits or letting the trade go into the close. In January of 2024, we had a market close and breakout on the Wednesday at the extreme, taking out the previous monthly high, giving us the highest closing price of the month. Just pointing out to traders that we ended November with a large bearish engulfment candle, then the gradual auction down into the end of the year in December. So just looking at our higher time from large first red day, a market that continued to break down into the end of the year, and a large engulfment candle, which started off the reversal process inside of the previous month's range. So just again, identifying some of the higher time frame indications from the high and low of month levels, a market that continued to stay up high and then exploding and closing in breakout, coming up on our watch list as a market closing as the highest closing price of the month. When we go to our 4-hour time frame, we can see the bursts, the explosive bursts, and then closing at the extreme on the 4-hour chart. Now, remembering that when we get to the extremes on the 4-hour chart, that time rotation heading into our session can give us an indication of how price is behaving at the highest closing price of the month. And just reminding traders that with currencies, they continue to trade at the 4:59 rollover, 4:59 p.m. rollover in our New York window, as opposed to the indexes, metals, and energies that don't start trading again until 6 p.m. And so that 4-hour rollover time is going to be at 9 a.m. as opposed to 10 a.m. on those other three markets. So coiling sideways after our highest closing price of the month, we have a pin reversing through the high heading into our New York session. And at the close of our candle at the 9 a.m. close, heading into our 9 a.m. 4-hour rotation, we had major red news at 8:30. U.S. advanced GDP. So if traders were using the higher time frame, again, a position taken in the market with our worst case stop at the high of that wick on the higher time frame. Again, just another way to address risk management based off the higher time frame of the 4-hour chart. Building your muscle memory, close and breakout, consolidation sideways, breaking out again. This is our 1-hour chart. Engulfing and coiling sideways into our timing window. Again, another reference for a worst case max stop loss based off of our higher time frame as we head into our new 4-hour rotation. So we have an engulfment candle, again, a worst case scenario based on that higher time frame risk management stop loss level. So traders, again, taking a position after major red news is released based on the higher time frame still allows traders to take an entry, put a stop loss in place, and walk away with a hold till close, or in some cases with with traders have the confidence allowing this trade to continue day 1, day 2, day 3 into a new week if they felt that this trade had the opportunity to continue in that direction back to the previous low of week, low of month levels. When we go to our smaller time frame, again, building your muscle memory, close and breakout at the extreme, highest closing price of the month, closing outside of the previous monthly high, coiling sideways, breaking out again, triggering new breakout traders on higher time frames and at the high of month levels before breaking down back inside, coiling into our news hour and breaking down and pumping up on major red news, heading into the close of not only our 4-hour candle, but our hourly rotation as well. We're underneath now. Without using the EMAs, we can already see that this market is coiling. We saw the reversal evidence with our pins and engulfments on our higher time frames, and the coil sideways, preparing for an explosive collapse. The major red news has been released. Now we go back to our original thesis. Using our multiple EMAs to represent the higher time frames, once this market pumps back up into our coil, so remembering we've already got our entry on our higher time frames. We already have a market that we can take a position in, but we had major red news at 8:30. As soon as we get that pump up back into our coil, entering into the market, not worrying about where or on any candle, once this closes with the pin into our coil, positioning as they build their confidence, scaling in and adding additional positions in, or when the market coils again, adding additional positions in once this market is already in profit. So we have an additional opportunity to take extra positions, still managing our risk at the lower extremes. And once that market breaks the low of the news candle, going to break even on those positions and leaving that market to close. And then again, if traders wanted to leave a trailer in the market now that we've sold hypothetically, which may be the highest closing level of the month, with a thesis that this could go back to a previous weekly low of week level. Pound Canadian in January of 2024, highest closing price in breakout on a Wednesday of the month, taking out monthly levels, coiling sideways into our timing window, major red news, taking a position, putting our stop in place, and walking away. We have a similar example on the Euro Canadian that we saw on the Pound Canadian, a market that closed at the highest close of the month on Wednesday, an explosive move back up to high of month levels. But also, you looking to the left, you'll notice we had large selling already happening in November, December at that level. And so, of course, just in simple terms, we could see selling off again after that high close of the week and high close of the month on the Wednesday. Just an evidence of where sellers, other time frame sellers, have come into that market. We've closed at the extreme. It's on our watch list heading into the Thursday trading session. Looking at our 4-hour rotation, again, we've made lower lows into the beginning of the new week before exploding and closing in breakout at the previous high of month, high of week level, and closing in breakout. And then just going back to our understanding of time rotation, we have a market heading into our US session window that has pinned through the high and closed back in underneath of closing price, London 12 candle window, heading into our new 4-hour rotation. Now, we had major red news on the calendar on this particular day for European markets. The big explosive move up, potentially driven by flash services manufacturing PMI European. We had major red news in the Wednesday for US window as well, which could have been part of that explosive pump with smoke and mirrors, where they use the news to take traders up to the extreme, stop hunting the high of month levels. But on the Thursday, we have the Euro main refinancing rate, monetary policy statement, an advanced GDP, and of course 8:45, the ECB press conference. And just coming back to our 4-hour chart, without having that thesis already in place, but we have a pin already through the high, pulling back underneath closing price. So just for one moment, coming back to our muscle memory, the chart is now setting up exactly as we want to see it for a potential explosive reversal. So when we have major red news again, the situation is I wait for after the news. But more importantly, how does the chart set up? Is it a well-engineered template heading into our session? We go to our 1-hour chart and we see the breakout reversal engulfment again on our 1-hour time frame, acknowledging that that would be our worst case stop loss scenario, the high of that 1-hour candle. Now we have major red news. There's a possibility this market could explode and run away without us, at which case I can take a first bar entry with a smaller position with a hold till close mentality, just reducing size. But if we have a nice coil and their major red news is released and there's no volatility, then we go back to business as usual to execute the setup if indeed it presents. Again, just building our muscle memory, we have the explosive pump, the close and breakout, beautiful peak formation, high peak formation, low coil sideways into our timing window. Paul Tudor Jones, think of your entry point as last night's close. We want to see that sideways coil heading into our window. Now we have major red news, but at 8:45 we still have our coil after the ECB press conference for a beautiful explosive collapse into the closing price and the low of the day. And when we see our coil representing our higher time frames, we see a beautiful coil at closing price on top of the breakout from the previous high of day level. After major red news, positioning ourselves and ideally scaling in to a market that has set up perfectly after the press conference, placing our max stop loss in place and either taking profits again. We have the previous closing price level as a potential target, or holding that trade till close. Now, just looking left, we see a pin from the news on the previous Wednesday U.S. session. That level, in the absence of a previous level after our coil, can be used as a break-even point once the market closes below there. Or when we pull back and drop again, the continuation, I would be moving all positions to break even, and again, either taking profits at a preset level or holding that trade to the close. So regardless of there being major red news, we still had a perfectly well-engineered template. Pump, coil, closing highest closing price, closing and breakout of the month and the week, the coil sideways, entry, stop loss, and take profit, level or hold till close trade. Zero stress, zero emotion, zero thinking, and virtually zero management after this trade has gone to break even. We'll see you in the next video, traders.